Great presentation, Christopher, and I'm going to avoid overlapping because we do overlap in a lot of spaces. I think RiskBlock, B3i, and others, we're technically competitors, but it's such a big market and it's very, very, very early stage. And I think one of the principles that we apply is really this is all about education. And at the moment, there's a lot of interesting stuff that's going on in the lab. But it's kind of tucked away, and it's all very theoretical, and it's all very experimental. And so we would really like to see, solutions coming out of those labs and getting into the business. But part of the problem for the business is they don't actually understand the technology. So we do spend quite a bit of time, very similar to RiskBlock. It's kind of an education process, trying to get people to understand what it can do. You're not really going to turn business people into really have a deep knowledge about blockchain, but a little bit of information is quite useful when they can start thinking of the application of it and the real problems that they suffer on a day-to-day basis, if you like, where the rubber hits the road, and then thinking, well, could blockchain be a solution to this problem I have? And then they can go chasing after their IT departments or their labs and say, look, please build this for me. So trying to kind of move it out of this sort of the theoretical space and into the business. So hence the title. I suspect a lot of you have been told quite a lot today about what blockchain means. I try to use a very, very simple definition, just so that it resonates with some of the business people that we present to. And call it a distributed database, a distributed ledger. You can call it a fancy Dropbox if you really like. I know that the purists amongst you and those more knowledgeable are going to say, yes, it's a lot more than that. It is indeed a lot more than that. But somehow using that terminology resonates with people, and they go, okay, I forget about the jargon, I kind of get it. So sort of moving on from that, well, what does it actually do? So we are a Swiss company. We're incorporated in Switzerland. So we thought we'd use a Swiss Army knife. But basically, a Swiss Army knife is a toolbox. It's got a bunch of stuff in there that you can use for various purposes. And so blockchain is a little bit like a toolbox. It can do a number of things, and there's 5 here, and there's probably many more. But it is a shared ledger, a distributed shared ledger. It's capable of running smart contracts. Smart contracts are nothing more than codifying contracts, and I know we can get into a deep conversation about how far can you codify an insurance policy. Well, even if you codified 10% of it, that's 10% of less work that you're going to pay the lawyers to do. It's immutable, again, a technical term, but basically, you can't change the information on it. You have to add new blocks which have new information. Very, very useful from an audit point of view, and certainly regulators seem to like it. Consensus, because when information is added, it has to be agreed within that network. So you've got the same copy, everyone has the same copy of what's going on, and therefore the information is trusted, and cryptography, I think, speaks for itself. But the issue with all of this is there's a bit of hype around blockchain. We think, okay, this is great stuff. We're going to use it for everything. Fantastic. But the reality is that if you want to open a wine bottle, you just need a corkscrew. You don't need a Swiss Army knife. And so that's another point we try to emphasize, that if all you're looking for is a shared ledger or a shared view of the truth, blockchain isn't necessarily the solution. It could be a very good solution in the longer term, but if that's all you need, just use Dropbox or something a little bit more fancy. So try to just highlight that, get over the hype and try to understand a bit more about the capabilities that this blockchain toolbox has and what sort of problems you have and how appropriate blockchain is to solve those problems. And so it's not going to be the choice all the time. We try to sort of emphasize that. But actually, when you delve deeper into your problem, then it probably is a good longer-term solution. So trying to emphasize that, trying to remove the hype a little bit out of it. In the context of insurance, there's quite a lot of challenges we face. I've been in the industry 40 years, and I'm just shocked at how inept the insurance industry is at really improving how we do things. But we are sort of on the cusp, I think, of a really great opportunity. And I was talking to Christopher earlier on, and both of us agree that we fell into this new technology, and it's one of those chance in a lifetime or career opportunities. there's a lot of things that blockchain can really do to improve how we do things. And it's an opportunity I hope that the insurance market really seizes. But they fall into what we kind of talk about in three pillars, efficiency, quality, and growth. Efficiency is really attractive, especially to your bean counters. If you're saving money, you're saving cost. Hopefully you pass some of that on to the customer. But you can reduce the transactions cost. I'm not going to go over some of the examples you've already had today, but reducing transaction costs and getting that interoperability, the standards that Christopher talked about. But then you move on to the data quality, being able to trust that information, being able to know that information you've got is really authentic, and then you can continue to use it and optimize the use of it. And that in itself works well with the efficiency side, because if you're removing a lot of those errors and you're making that data more trustworthy, then you are saving indeed a lot of money. But also you're improving how you use that information. And then finally, growth. And this is a little bit of a challenge sometimes for people, because they say, how is this going to lead to growth? Well, I think apart from the fact that any new technology that comes along, and those that are more creative will start thinking, well, how can we do things in a different way using that new technology? You can apply that to a lot of different things. But one of the more basic things is, and I've been challenged on this before, was how can this lead to growth genuinely? And I've turned that question around and say, well, just think of all those use cases, all those product developments that you've developed in the last 5 years, and how many of them you had to chuck in the bin because they were uneconomic. And they were uneconomic because your costs were too high. So if you are improving the efficiency of how you are as a business, your business model, you could dig those out and see how many of those now become economic. And you suddenly find that they are economic, and you put them out into the market. So there's growth. So growth really on two fronts. The protection gap one is one that we strongly believe in, because actually there are huge opportunities of, for example, in microinsurance. I know there were some examples that Christopher had up, about how you can reach out and enable people who wouldn't normally be able to access insurance to be able to access it. And parametric is a good example in agriculture, for example. So those are three things that we try to use to describe how we can overcome some of those challenges that we have in our industry. And you've probably seen this several times, before, but yes, indeed, our first use case is reinsurance, and reinsurance it's quite a small network. It's got maybe 3, 4, 5 reinsurers. Yes, you can have 120 reinsurers in a network, but then you've got the cedant, and sometimes you have a broker involved. And blockchain lends itself to networks like that. And so it's an ideal space to start to think about how how blockchain can apply to the reinsurance market. It also applies to supply chains, as commented on before. And certainly any claims is indeed a supply chain. Imagine subsidence on your house and how many people get involved in trying to put that back together. It's a supply chain. It's indeed a network. And the application of those elements of blockchain, sharing the same information, being able to trust the information, the fact it's immutable, that mitigates the fraud, and all that. Absolutely ideal for anything that involves something that looks like that, something that looks like a network. As far as we're concerned, a little bit about our history. We kicked off in October 2016, where 5 of these companies got together and thought, well, this technology looks quite interesting. There's a story. There was a bunch of guys who were, after a conference, they were drunk on a train, and they came across this thing called blockchain, and they thought, oh yeah, let's have a go at this. They got together the next week, and they sat around a table and said, okay, what are we going to do? And they said, well, does anyone know what blockchain is? And the answer was no. So actually, they went out and they found some people that did, and 5 of those original 15 founders were there, and they decided, yes, this is interesting, needs a network, so we could do with some more members. So they went out to the market, and another 10 joined, including the company I used to work for called Aegeus. So we joined up. There were many more besides who wanted to, but the cutoff date was the 15th of December. So there it is. We ended up with 15 members who then decided, well, what are we going to do? What's the first use case going to do? Let's build something and try to prove that this stuff can do something good. So they decided to use a reinsurance use case simply because low transactions, low claims, hopefully, and a pretty small network to test. So completed the prototype, launched it in Monte Carlo, which is obviously where you do launch products. And then in October 2017, we put it out to the market to test. And we attracted a bunch more insurers and reinsurers from across the globe to help with that testing process. And what that testing process told us was actually, yes, this particular use case could in theory save you 30% of your admin cost across that value chain between the reinsurer, the broker, and the insurer. It's going to differ for each element of the value chain. But with that research that we did, and it was done independently, it kind of gave us some confidence that we had proved the point. We'd proved the point that actually, in this particular case, reinsurance transactions, that we could save some costs, we could save some efficiency. And all that is built around the fact that there's a lot of reconciliations that take place between those parties. That's wasted effort, creates errors. Whenever there's a human being involved, there's an opportunity for error. And if you can eradicate that simply because you're using the same version of the truth, that's a huge help. The instant messaging, if you like, I'm calling them a messaging process, means that you can virtually conclude this in real time. And normally a reinsurance contract will not be signed for 90 days. So within that 90-day period, you could have a claim. So where's the contract certainty then? There's a lot of contract uncertainty. So again, that removes a lot of that uncertainty. And more besides. So with that in mind, we thought, okay, well, let's take this to market. And as it happened at the end of last year, that memorandum of association that we were working under, that consortium expired. And we thought, and we knew there were many more that wanted to get involved. And we thought, well, no, I don't think this is going to really work. 15 was enough around the table, even though we had a common interest of trying to do something good. We decided to incorporate in order to take that to market. And that happened in March, early in March this year. For some reason, we decided to incorporate in Zurich, which is interesting. I would have preferred other locations like London myself, but there you go. So there's our first product. I'm not going to dwell on it too much, but the main benefits that we're creating there that I touched on is you've got this information transparency. That's not only useful for that network, but it's also useful for regulators. So if they want to audit what you've been up to, just give them the key and say, go and have a look yourself, instead of going through all this reporting that we have to do. So you've got that benefit, you've got the contract certainty that I mentioned, and then along the other elements, you've got the efficiency, which is also including the claims efficiency. It's in effect the smart contract coming into play. I have to admit at this point that the smart contract that we're using within this is pretty dumb. It's not really that clever. That'll come over time. But initially, it can at least automate the premium calculation and posting posting things to the accounts, the commissions, and obviously payments. And in terms of payments, I mean, at the moment, it would be up to the cedent to say there's been an earthquake, there's been a valid claim. In future, you'd use something like an oracle that would trigger that process and automate it even further. In terms of actually the money moving out from one account to another, I'm sure a lot of our reinsurers would rather be signing the check, or at least signing it off, rather than it being taken from the bank account. But that'll come over time. I think the important thing is you prove that you can get this efficiency into that pipeline, improve the way you do things, and more will come beyond that. So let's not try to run before we can walk, is the mantra I use. So I mentioned earlier on that closing that protection gap is quite close to our heart. We've adopted this as a vision, and it's to accelerate the world's transition to a more relevant, accessible, and affordable insurance. Now, some of the components in the latter part of that statement are around that efficiency, are around making insurance, passing on some of those efficiencies to make it cheaper for people, so it's more affordable. And that includes mature markets, because there are a lot of people being marginalized even today because insurance is getting so expensive. Making it more accessible, that's part of the sort of the distribution. Getting out and reaching out into parts of the world where people can't normally access insurance, and making it more relevant. And that's partly around trying to be a little bit more innovative. Now you've got new opportunities to do things that you couldn't do before. But in terms of accelerating the world's transition, I mean, we are glad to see a lot of competitors coming into this space and starting to develop ideas and develop use cases. And it's really, really encouraging to see so many use cases that RiskBlock have got and are prepared to share. It is all about trying to move our industry from the sort of the dinosaur age of where we are today, into something new. And the more of those use cases that come on board, the more adoption there is great. It'll help educate people, help people understand what it can do for their business and so on. So in 5 years' time, hopefully that acceleration will take place. That's not only from us, but we hope that we'll act as some sort of catalyst for that to happen. In terms of what we're doing, clearly that first use case we developed, we thought, yeah, okay, we'll build a bunch of products for people and we'll, encourage them to use them. And we thought, well, in the process, we've got our list of priorities. What if someone comes along and says, yes, I'm a life insurer. I'm not really interested in your catastrophe excessive loss insurance. So what have you got for me? And we say, come back and talk to us in a year or two. We might have something for you. Well, that's not really a very good proposition. So the realization was that we were building an infrastructure. We were building, common data standards and a common platform. We thought, well, why don't we let them build what they want on that platform? So hence that pillar which says product partners and partner services. It's really a bit like the App Store. It's really, if you want to build something yourself, come along and do it, as long as you do it to these standards and it can coexist with the other elements in there, then that's fine. So we don't have to own and we don't have to build everything ourselves. But that would basically open up opportunities to start to create an ecosystem, certainly start to create a network. We'd go further than that if we see that a competitor has got a really good product. Let's say someone like Blocksure, well, we like your product. We think that would be quite useful. Can we license it from you? Or would you like to put it on our network? So, licensing, we could invite other people to bring their products. As long as there was those common standards that were adhered to, because at the end of the day, you need interoperability for all this to work. So again, that's really important if this is going to actually be of benefit to the market. This is just reinforcing what I said earlier on. What we're about is really looking to engage with that efficiency, keep the bean counters happy, the quality keeps the underwriters happy, and the growth is going to keep your salespeople happy. So it's quite a compelling proposition if that's indeed what you can offer using this technology. Why wouldn't you? The hype I mentioned earlier on, we're sort of what Gartner call we're in the trough of disillusionment now. I would disagree. I think we're in a new hype phase. And why do I say that? Because I think a little knowledge is dangerous. And going back a couple of years, you'd ask an audience like this, how many of you know anything about blockchain? And those that said a little would be about 70% of the audience. Well, today it's about 30%. Oh, and by the way, there's always 10% that are experts. Doesn't matter what time of however many years ago. So there's 10% are always experts. But so that knowledge of blockchain is kind of moving on, which is a good thing. But also it introduces more hype, heightened expectations. Because they suddenly think everything's going to be run on a blockchain. Everything's wonderful, and this is going to save the world. And that's why I say there's a new hype emerging. And we've just got to delve a little bit deeper into trying to educate those people. I think in terms of the insurance industry, we suffer from something I call the 3 Ls, and that is legacy systems, legacy products. But the most dangerous one is legacy mindsets. So those are the people that think, well, yeah, all this stuff's really interesting, but not on my patch. Not invented here, so I'm not interested. And that's really the one we've really got to get over. So just kind of emphasizing that education piece, which you've heard already on the panel and in the session earlier on. Getting blockchain out of the lab and into the business. So how would you overcome that? Managing expectations is really key. Because you could walk out of this room and think, oh, this is wonderful. Let's go kick a few tires. But actually, you need to be patient. It's not all going to happen at once. I'll be the first to admit that what we are doing is just an experiment. And our next product will be an experiment. And the one after that will be an experiment. They're just testing. You've got to get traction and you've got to get motivation behind them. And you're not really going to prove that this really, really does help our market, the industry, probably for 5 years. And that applies to our competitors as well. I genuinely believe that. So there is a degree of expectations you have to manage and be patient. Everything we produce will provide benefit, but for it to be material, it's going to take a little bit of time. Learning and education, been through that, but collaboration and engagement is really, really key. So going back to what we said earlier on, blockchain involves a network, it involves collaboration. And as Christopher said earlier on, the Institutes is all about people working together within an industry, and that was the same with B3i. We're trying to do something which doesn't give an individual company or member a particular competitive advantage. What we're trying to do is solve problems in our market, in the industry, for the benefit of everyone, which starts to level the playing field so you can start to compete on real quality aspects rather than just competing on inefficiency. So collaboration and engagement, really, really important. So if there's 3 messages I'd like you to go away with, they'd be those. Blockchain is wonderful. It's great. It's a chance in a lifetime, chance in a career to be involved in it. I'm personally really pleased about that. But it has a long way to go. We've just launched a membership community thing where, again, it's all about education and engagement and collaboration and stuff like that. So that's it for me. I've kept you from your drinks long enough. Maybe there might be 1 or 2 questions, but I'm gasping for a drink. I wasn't too pleased about getting the graveyard slot. I think we need a microphone over here. I wasn't too pleased about getting the graveyard slot, but thank you for being patient. I can't really see your faces. You might be half asleep, but hopefully not.
Thank you. The 30% cost savings you mentioned,
Yep.
Was it realized or is it achievable? My question is, so you mentioned obviously there's a lot of reconciliation and paperwork that can disappear, but those systems, they don't do only that. So were your members able to decommission those systems and truly achieve the savings, or is it something that is potentially achievable?
Okay, so where does the 30% come from? 30% comes from, we got some consultants to do this work for us, so it was anonymized as far as we were concerned. And they simply went to those participants, those 38 members that tested the product, and said, if you use this product, how many people, how many FTEs would you no longer need to do reconciliations? It was really, really simple, a really, really simple question, okay? And the responses that came back said 30% of my admin costs could be eliminated, which that would equate to about 0.5% on your COR. So that was what the output was. Okay, it's going to vary for different people, but that was it. There's a lot more savings or a lot more efficiencies like cash flow and capital and so on and so forth, which wasn't built into it. So actually, that kind of gave us some, even if that 30% was wrong, 20% is good, or even 10% is good. But we knew there were more benefits besides that. That helps.
Yes, but as long as you have the old way and the new way coexisting,
yep.
You're actually not saving anything.
Not initially. So again,
that's my question.
Well, not initially. Well, so initially you'd commence with a parallel run. You'd run the live product. You'd parallel run it because you'd be an idiot if you didn't do that. Really, quite frankly. But eventually that remains legally binding. This is legally bound, and eventually that will drop away once you have complete confidence in it. So that's why I say be patient. It's not going to happen overnight. And you are talking about hundreds of millions of you're not talking about a few dollars on a flight policy. Hundreds of millions. Got to get it right. Be patient. But we've got faith that it has some benefit.